Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. It's getting to be that time of year again when we have to think about tax filing for last year. I believe in paying my fair share of taxes, but I want to pay a dime more. So we're here to help talk us through some of the important tax tips and help minimize our tax bills. Mark Sipos, Director of LFG Tax Service. So Mark, what's the first tip you want to consider?
The easiest thing that you can still do for 2021 is maximize your accounts such as IRA, SEP IRAs, Roth IRAs, and your health savings accounts. These can all be fully funded up until April 18th and provide great tax savings and a way to save for your future.
We'll get a couple extra days this year.
Right.
Yeah. And maxing out your contributions is always a good idea because it can increase your savings and investment while decreasing your annual tax bill.
That's right. Another great strategy is tax loss harvesting. And by using tax loss harvesting, you eliminate the gains in your portfolio that you have by triggering losses as well. Those losses can offset gains dollar for dollar and even go as high as $3,000 against ordinary income.
Yeah, so tax loss harvesting only applies to taxable investment accounts. Retirement accounts like IRAs and 401k accounts grow tax deferred, so they're not subject to capital gains taxes.
And at this time of year, I get a lot of questions about gifting, whether it's to a family member, your favorite charity, or a friend. And I like to suggest using appreciated securities instead of using cash.
Yeah, because gifting an appreciated security means getting a write-off for its current fair value. So even if you pay $10,000 for a security and it's now valued at $20,000, you can write off the whole $20,000 when you donate it or gift it.
That's right, and you can also use tangible personal property or real estate as well.
And this year, they've also increased the above-the-line deduction that came about in 2020 to $300 a person, which is not much, but they've also increased the amount you can donate too.
Yeah, the Congress also passed during that act that you're allowed to contribute for cash contributions up to 100% of your adjusted gross income by simply making an election. Previously, the most you could do was 60% of your adjusted gross income.
And you can also use qualified charitable deductions or QCDs to give your required minimum distributions to charity if you don't need them. That can lower your tax bill significantly while still allowing you to do good work for your favorite charity.
And finally, the last tax tip I have is for this coming year, think about bunching your itemized deductions. By bunching, I mean you can prepay things like medical expenses, real estate taxes, charitable contributions, put them all into 2022 to get you above that standard deduction amount. And then in 2023, you can fall back and use the standard deduction again.
So Mark, thanks for sharing these valuable tips. These are all good suggestions as you consider your tax bill for 2021. Figuring out which of these are the right strategies for you can be challenging, and so we're here to help. Give us a call today, and we can help with anything from complex tax strategies to simple returns. Here's Fox News Sunday.